So you want to buy a house right now, but this market is making you feel super uneasy. Whether you're a first-time home buyer or a home seller, the Denver real estate market right now is certainly challenging. In this video, we're going to cover 5 ways to buy a home right now that could save you a lot of money. So high mortgage rates, currently over 6% for a 30-year fixed-rate mortgage, paired with hefty listing prices, are quickly making buying a home unaffordable for many. The Denver home market appreciated in a big way over the past few years, and now home buyers are feeling pinched. While high prices and high mortgage rates affect all potential home buyers, those first-time buyers entering the market are finding this situation super difficult. So stagnant wage growth coupled with inflation has increased the cost of living, and so many are finding it difficult to save for a down payment and afford expensive monthly housing bills. Being priced out of homeownership prevents a lot of people from building the kind of financial security that comes with owning a home. But don't worry, this is what you need to hear. You can still buy. So when prices are high, competition is low. That makes sense, doesn't it? If you can make the finances work, you have a better chance of nabbing the home you want without competing offers from other buyers. Another benefit, lower competition means homes are staying on the market a little bit longer, and when that happens, home sellers are more willing to negotiate contract terms and even their asking price. So are you ready to make homeownership a reality? As an experienced real estate agent in the Denver metro area, I can help you take advantage of this current market, and here's how. If you can secure more upfront funds, either from savings, and inheritance, investments, or other sources, then a rate buy-down might be right for you. A mortgage rate buy-down is an option available from a lender to reduce the borrower's interest rate for a period of time. The most common way to get a mortgage rate buy-down is through points, which are essentially fees that you pay upfront when taking out your loan in exchange for lower interest rates over time. As an example, for a $400,000 mortgage where the buyer is offered a 6% interest rate, paying $4,000 would lower the interest rate to 5.75. Even though you'll be paying more upfront, the overall amount spent over the life of the loan will be less because you've locked in a lower interest rate. And here's the best news. As an experienced realtor near you, I can help you negotiate so that this buy down does not cost you anything. In some circumstances, the seller might be willing to help you with this so that you can get a significant reduction in your interest rate, which translates into major savings on your monthly loan payment. This can really benefit those submitting offers for their first home. So number 2, put off major renovations and DIY what you can. If you had plans to remodel the new home that you're buying, you might want to consider seeing where you can save money by either putting those repairs off for a little bit or doing minor updates on your own. So are major renovations something you really need to do right away on your new home? You know, if you delay them a few years, you can build equity and eventually pay for those updates with a home equity loan or line of credit. Or better yet, do the renovations your own without borrowing any money at all. Learning about home maintenance has so many benefits. Getting confident about your own ability to make repairs might empower you to consider offering on a lower priced home that needs a few updates and you can do it yourself. But be careful with some of those projects because some of them really do need a professional. And you know, we cover some of those tips in another video that I'll link at the end. So number 3, revisit your must-have list and see if you can find a house with a lower sticker price. Do you really need all 4 bedrooms or a home in a specific neighborhood? Could a less updated or aesthetically pleasing home be something you'd consider? Opting to shop for a smaller house or one that meets your essential needs instead of one that has everything on your wish list could allow you to find a property that works for you at a more affordable price. By being open-minded about what you deem as must-haves, you'll have more options to choose from, which increases your chance of finding something that's available at a lower cost. So number 4, increase your down payment for a lower monthly payment. There are a few creative ways to increase your available cash so you can afford a larger down payment. Here are a few top options. Number 1, hold off on buying right now to save up. To increase the amount you have available for a down payment, consider putting off the purchase of a home until you're able to save up a little bit more money. You will need to determine your savings goal and make sure it's realistic for your financial situation. Some tips for saving money, of course: buy groceries in bulk and reduce the impact of inflation on your budget. Find ways to spend less on gas by driving less and doing errands on bike or on foot. and reduce expenditures on non-necessary purchases like eating out or updating your wardrobe. A side hustle is also a great way to build up your savings. Driving for a rideshare company, house sitting, even dog walking are all easy sources of part-time income. The second way is a first-time homebuyer assistance, if it applies to you. If you qualify as a first-time homebuyer, there are potential financial assistance programs available from state and federal governments that could help increase your down payment funds and result in a lower monthly payment. These programs vary by location, so be sure to reach out to me and I'll connect you with a great lender who can talk to you about options. The third option is gift money. Did you know that anyone can contribute to your gift money for your down payment fund? If so, gift money is a great way to increase your down payment. It does require careful consideration and planning, since gifts from other people must meet certain criteria before being accepted as part of an official loan application process. You'll need documentation proving this fund's source and that it's actually a gift as opposed to a loan that has to be repaid, and as well as your proof of your own income. So it's best practice to consult with an experienced lender, so just reach out to me and I'll get you connected. We want to make sure you're following all the rules that govern those transactions. The final tip on how to make homeownership a reality this year is to buy now and think about refinancing down the road. A lot of us have done this. In fact, my first mortgage was at 9% and I refinanced a couple of times while I was in that first home. Buying a home while mortgage rates are high and then refinancing later when mortgage rates drop is a smart move because it locks in the current rate. By doing this, you can avoid paying higher interest if interest rates go even higher, and you still get the benefit of a lower rate after you refinance. Additionally, by locking in the current rate, you have time to build equity in your home before refinancing. So opting to buy now also helps you take advantage of the reduced competition. If you wait until mortgage rates drop, you'll be competing again with other buyers, which might mean you'll end up contending and competing offers and potentially a higher price paid on that home. It's also important to keep in mind that though current mortgage rates are near 20-year highs, overall they're at historic lows. So just take a look at this chart from the Federal Reserve of St. Louis. Rates are nowhere near the double digits that were commonplace in the 1980s. So there you have it, the 5 ways you can move forward this year as a home buyer. Are you ready to get started on your home search? Just call or text. Let's see how I can help. Cher Revolinski, eXp Realty, 303-884-2738. Talk to you soon.